Welcome. How's everyone doing today? I hope you are doing well. Uh, Interesting things happening in the market. We're going to talk about it today, but as usual, I have a full lineup of material to cover with you. I'm Gianni Di Poce, going to be with you until the bottom of the next hour. Got some work getting done at my house today. Actually, I kind of like trying to squeeze in some deck repairs here before, we had some snow, but the snow melted. It's going to be warming up a little bit, but the markets are keeping me more busy and more entertained in this environment. Like I mentioned, a professor, a bit of an odd tape, not really what I like to see. The fact that the Dow hit a new all-time high today, but the Nasdaq has been struggling for the last, well, I should say yesterday and today so far. We'll see if the Nasdaq can come back. This morning it was outperforming. But the fact that you're seeing chips do so well with the NASDAQ struggling does have my eyebrows raised. And so we're going to talk about that, how there's been some thin leadership in terms of the number of stocks outperforming the index year to date, but that how that could actually be improving into year end. I want to ask you this and let me know what you think. Is this the most hated rally ever? I really can't think of many other instances where a rally in stocks has been so hated. Usually you'd see a situation with tech doing well. Maybe it has to do with crypto kind of struggling here, even though the low in Bitcoin is holding so far. But I think because of some of that speculative fervor that we saw, like those high flying names, they stopped going up so much basically about a month ago. And I think it's been causing some issues with sentiment because there haven't been uh, kind of those high flyers that help pad your alpha and outperformance in the portfolio. So maybe that has been a big reason. But there's been a lot of negative sentiment in this market. A lot of people angry online about the state of the economy. I totally understand that. It's a two-tier economy. That's just a fact. I was on live with Garrett this morning. We talked about that a little bit, how basically the economic data only represents the reality for one tier of the American population. The other tier really is not represented, and that's just an unfortunate fact. So we need to understand that when we are dealing with markets, we are dealing with the tier in which the data is reported, not the tier that reflects the reality for the majority of the population. So I'm watching crypto today. You got hit here pretty hard after some good price action overnight. So we'll see how that settles out. Got that Bitcoin low holding. And if you didn't see yesterday, we released here at TheoTrade the new Trinity Trade Terminal. The new Trinity Terminal technology, very, very exciting, puts the strongest performing stocks in the market right in front of you. I'm going to show you a little bit of inside baseball on that. But before we get into all of the good stuff uh, that I have to share with you today, let's talk about how prices are crystallized beliefs. Prices are crystallized beliefs. Why do we study price? Why do we act on price as traders? Why do we stare at charts? Why do we look for patterns? Why do we measure momentum? Why do we look at volume? Why do we look at order flow? Why do we look at past performance? Why do we look at past manias, past depressions? And then layer that with what was going on or what is happening in the real world. You see, trading will expose every character flaw that you have. If you have greed, you'll blow up. If you're scared, if you're scared and you're fearful, you'll miss everything. If you're impatient, you'll overtrade. If you have too big of an ego, an unhealthy ego, the market will humble you. Trading doesn't just build character, it reveals it. And it's all revealed through price, your reaction to price, what you do when price is doing whatever it's doing, right? So when I am not right on a trade, when I am not correct on a trade, I don't say, oh, the market's wrong, the market's stupid, or I blame this guy, or blame that guy, or blame whatever. I look in the mirror and I say, I'm not aligned with what is. The market is right. The price is truth. Prices are crystallized beliefs. It is the representation of all traders and investors and speculators in this market. It's the voting machine, a giant voting machine. And it's me basically saying, hey, like, I think this is going to be the outcome. I think that's going to be the outcome. And the market's going to ultimately tell me if I'm correct, and it's going to be telling you if you're correct as well. So, just things that I like you to think about, uh, things that I like you to think about. And let's go ahead and jump over here to Think or Swim, see who's all joining in the chat room today. Appreciate you guys tuning in. Who do we all have in the room today? We have John, Stephanie, SHP, JT. Welcome to the Trinity Trade, JT, by the way. So hope I'm getting some warm cider to keep warm. You know, Steve, I've not had any cider this year, believe it or not. So I guess time's running out. Maybe I'll go to the store and grab some. But I do love cider. I do love cider. You know, when I was a kid, one of my, sure many of you have this memory as well, like, you know, going to the cider mill, getting some cider and those donuts. Um, so yeah, a lot of fun. Now the kids like to go, but you know, usually, you know, the wife takes them and they go with my parents or whatever. But anyways, Roger Bro, how are we doing today? Um, SP has access to the Trinity Terminal. Wonderful. Glad to see it. Glad to hear it. Les, Chicago Dave, Mopar Maniac. I like it. Is Mopar is that, are they still operating under that brand, like the auto parts supplier? I know they were like with at the time it was Chrysler, now it's Stellantis or whatever. But I don't know. I don't well, we'll see. Anyways, D Cox, Nora. You think Professor is obsessed with me? I don't know. Is he? Patty, G-Man, D-Gen, Jeff Wheezy, Mark, Ken, Trains, Greasy Donuts and Birmingham Cider Mill. Yeah, I've not been to that one. Brian, thanks for tuning in. Calvin, Rio. All right, everyone. Let's check in on the portfolio here. A little bit of a bounce in the market, thank goodness, because you know, a little odd that again, what's kind of baffling me or surprising me is how tech uh is struggling today. Well, I should say the Nasdaq is struggling, but you have chips doing so well. So we're going to look at that in a moment. But that's not even the biggest story. And I'm actually going to use the new Trinity terminal to reveal what the big story is. And it's reflected a lot of other places, but in terms of directing you to actionable ideas, what is the Trinity terminal talking about today? Tall Tex, glad you're here. All right, guys, the dollar keeps holding up pretty good. I am looking for a pullback here in the dollar yen. It's a pullback that I am going to want to buy. You know, what was it, a week or two ago? I kind of announced my shift in the approach to the currency market. I am now a dollar bull. I think the dollar is going to have a really good 2026. I think the economy, you know, for the tier that is represented in the data, is going to do better than expected. You know, there's talk of stimulus checks being sent out. I mean, guys, I live in the real world. I pay bills, $2,000. Yeah, people will take it. But it's not going to make much of a difference, right? So it's going to be sent out. Scott Bessent was out today saying $2,000 checks for people making $100,000 or less. I mean, I don't even think it's going to come before the holiday season, so it could come after. And again, that's just gonna go straight away. Now, I have told the story about how my brother, um, you know, took his stimulus check from 5 years ago, started trading with me, and built quite a nice nest egg. So, you know, if that's a route that you want to explore further, let's we'll talk about that when the time comes. Rio, will they tax the $2,000? Did they last time? I think they did. I don't remember. I don't remember. Um, Chicago Dave, that's a good point. $2,000 rent is 2 to 4 months for $2,000 is rent for 2 to 4 months for some people. You know, back when I lived in the apartment before we moved into this house about 5 years ago, um, let's see, my rent when we first moved in was 665 a month. It was a waterfront apartment, fresh out of college. I was there for several years. Um, my wife and I, we lived there together. We lived there before we were married, and then we were married and then lived there for a couple of years before we got into the house. But yeah, I mean that would have paid pretty much half the year in rent, half the year in rent. So yeah, I mean hopefully they don't. I mean, if it isn't it tax revenue, it's like, hey, we're gonna give you back tax revenue and then tax you on the tax revenue. Would be typical government bureaucracy, would it not? So dollar yen going higher, the dollar's down. Actually, it came back a little bit. Euro came back a little bit. The dollar was down against or I should say, it was up against the euro. The euro has come back some. So yeah, again, it really just comes down to the weakness of the Japanese yen, which is the theme that I have been hammering. The carry trade's back. Abenomics is back. And if you don't know what Abenomics is, that comes from their old Prime Minister Shinzo Abe. Recall that he was assassinated a few years ago. Very sad, but his economic policies at the time was around weakening the Japanese yen. And I've talked about this when it comes to tariffs as well, right? So, oh, we have 10% tariffs on Japan. Look how we're posturing. You want to sell to America? Okay, fine. Well, guys, like the Bank of Japan they're not going to pretend like they're independent like the Federal Reserve does, right? So okay, we do 10% tariffs on Japan. Well, then if Japan's going to come out and devalue the yen by 10 or 20%, you see how it makes absolutely no difference, right? So, if it's going to cost $110 to buy something from Japan when it cost $100 before, but then Japan goes out and devalues their currency by 10 or 20%, you're right back down to $100 or even less, even with the tariff, even with the tariff. So that's what I've been saying all year is like, don't get distracted by these politicians that want you to believe that like they're your savior and they're so important to your livelihood and all this and that. I mean, the playbook excuse me, said it like wrong like three times. The playbook has been run time and time again. None of that stuff really, it's marginal. It's like in terms of importance, it's just a sideshow. It's a distraction. It's just a way for the media to try and get you to tune into the nightly news. Okay, so the weakness is coming from the yen. They're going to devalue the crap out of that thing, and I think one of the biggest surprises that we'll have in the next few months, I think the Bank of Japan is going to have a dovish pivot. I think it's going to surprise a lot of people. So look for the weakness in the yen to continue. This is a tailwind for stocks. So that's what we're seeing on that front. We're seeing bonds continue to climb higher. Who have who's been the bond bull? It's been me, and I think we're on the verge of a big breakout in bonds. I think that bonds are going to rally into the first quarter, the second quarter. There's going to be a big refinance boom. It's going to lead to a bunch of more money coming into the economy. People are going to spend it. That's what they do. You realize the whole reason why they want to send out these $2,000 of stimulus checks is to get people to spend it. Okay. So when they say they're trying to fight inflation, I hate to break it to you. They're not really serious about it because they actually do want a little bit of inflation. They've told you the playbook. What is the playbook? They want low rates with inflation maybe 2 to 3% above interest rates. They want to devalue the debt. Yeah, Tim, you and me both. Use it to pay for my extra healthcare premiums. Well, yeah, if I get it. I don't think so, but yeah, yeah. Anyways, that's the world that we're living in, guys. That's the world living. Yeah, my health insurance went up 30%. So what are you gonna do except pay it, right? I mean, hopefully they get some reform on that. If you had the ability to just pay for catastrophic stuff, I'd probably do that and then pay the rest out of pocket. But yeah, bonds are looking bullish, guys. It looks like you got low rates coming the into the picture here, and I'm looking for bonds to make. I think 30-year bonds by the end of the year could be testing their highs back from April, and I think the 10-year note is going to take out that high even sooner. So, yeah, I mean, take a look at crude oil, hard sell off once again today, another lower high. But you know what's interesting about this is you've seen some strength coming into the energy sector, and the ultimate widowmaker, natural gas, has been starting to do well. And I'm actually, wondering if this is going to be part of the next energy phase of the AI trade, right? So like the whole AI trade is evolving. We've talked about, money cycling out of chips a little bit, going into healthcare, biotech, and when it comes to the energy, right, it's been all about nuclear all year. URA has done very well for the year. It's down recently. You look at some of these individual names like Oklo and SMR, they've been struggling as of late, but they were great trades earlier this year. We were able to take advantage of a lot of that. But I think, maybe the next story when it comes to power generation is actually with natural gas. Now, I usually don't trade natural gas, and I'm not saying I have a trade idea for you on natural gas right here, right now. But it's a lot stronger than crude oil is, and kind of, you know, walks to its own beat, if you will. Okay. There's not really a strong correlation with natural gas and crude oil. I mean, yeah, when you have those big spikes, you'll see it. But natural gas has been a lot stronger than crude oil over the last couple of months. I mean, crude oil, this thing looks like it's about to get smacked down big time. So, yeah, you got some issues here with crude oil. We've been all over it, been staying away from it. There's a couple setups that have my attention that interest me. But yeah, it's not the place where the most action is right now. So, okay, let's go ahead and take a look at what's going on in stocks today. We're at the lows of the day. This market really just is a chop fest right now. Um, and that might continue into the end of the week. I mean, you still are up on the week, just some sideways action here. This actually would be pretty healthy, even if we just finish the week kind of like where we are uh, today. But I don't I don't like this weakness in the Nasdaq. This is highly suspect to me. This is highly suspect. I mean, if the Nasdaq doesn't hold this level, you're probably going to drop another 300-400 bucks, take you back down, 25,100, 25,200. So, but what's so interesting and what's so peculiar, as I mentioned, is the strength in chips. Now, obviously, AMD is doing a lot of the heavy lifting. We still got that open position on AMD. Got that target of 325. Doesn't seem so crazy now, does it? So I like AMD here. I'm still long. We are still long here. We booked profits on MU earlier this week, those final profits. And again, I'm just looking for rotation. Rotation within the chip space, the tech space. But again, seeing the Nasdaq lag here as the Dow breaks out to a new all-time high. We had a similar setup before the volatility earlier this year. Okay. So I'm not going to sugarcoat it. Like, we need to see tech step up. Now, as recently as 2 weeks ago, it still is the best sector year to date, right? But this can't go on. This can't last. You need to see technology and the NASDAQ leading if you want a healthy market. So I'm going to talk about some of the things I'm seeing underneath the surface here with you. Let's go ahead and, just as a reminder, I shared this a couple of days ago. The S&P historical performance after the shutdown, usually it's pretty good. So I don't know, on Sunday or on Monday, they made it seem like the shutdown was like it was done, and it's still shut from what I understand. So I'm not really sure what all the hype was about. I know they've supposedly made some progress, but okay. Um, over what? Over what? I mean, so we'll see if it comes. But I do want to talk about how less and less stocks have been outperforming. It's really interesting because last year, one of the things we talked about was how so few stocks in the S&P 500 um, outperformed the index. Now, what's interesting is that at this point last year, I myself was doing a lot better than I'm doing this year. And so you're gonna have years like that, obviously. Um, so there's even less names outperforming the market now than we saw last year. So we need to see more names outperforming. And I think that we're starting to get that set up. And so there's less and less to choose from. That's okay because we like to focus on the strongest stocks in the market anyways. Okay. Now you've been hearing about all this bad breath and the amount of stocks underneath respective moving averages. Well, you're actually starting to see that pick up. Okay. So whether it's the 20-day moving average, the 50-day moving average, or the 200-day moving average, that bottomed last week. It bottomed last week. Okay. So now you're starting to see stocks reclaim those key moving averages. It's funny how like all the breadth deteriorators won't tell you when it's getting better, right? They'll just say, "Oh, it's getting worse and we're going to have a correction and we're going to have a pullback." Okay, well, you're going to tell me when it gets better because it is getting better. We had another reset on Friday. We did wash out a lot of the weekends in the market. Okay? So as a reminder, guys, if a stock is not performing for you in your portfolio, you have to let it go. Hope is not a strategy. Hope is not a strategy. And you have to think about the concept of spilled milk. You can't cry over spilled milk. Don't get attached to these trades. Okay? We hold stocks that are performing for us. It should be a privilege and honor for a stock to have a presence in your portfolio. If it is not serving you, treat it like you're the king or the queen. Your portfolio, like is like your kingdom, basically. If a subject, a stock, is not serving you, you are banished from the kingdom. You no longer have access to the king or the queen. Okay? Because you're missing out on having stocks in your portfolio that actually are serving you, that are actually serving you. Big, big difference. Okay? So I ask you this question, and I like to get your insight in the chat. Let me know. Is this the most hated rally you have ever seen? Because last time we had sentiment this bad, okay, yeah, you had 2022, sentiment was bad. Okay, the 1 year average. I mean, are we going into a recession? I mean, you kind of had this similar setup going into 2008, 2009, right? I guess there was a lot of positive sentiment back then, but then you climbed up, into 2000 from the 90s, dropped hard. Every time you see these big drops, they usually coincide with some sort of market decline. Okay. Now in 2000s, you had it dropping for a long time, but I mean, you're almost back at 2000 levels. I mean, at that point, you had already seen the market start to drop for a couple of years. But why do you think so many people hate this rally? I'm actually curious, like what your thoughts are. Do you think it's because they're not participating? Do you think it's because they see, the reality of the world in front of them and they don't believe how this can keep up? Because I hate to break it to you guys, but like in other countries, there's even more concentration. Like you look at some countries, it's like 80% of their index is like 10 stocks, or 80% of their market is like 10 stocks. Okay. So yeah, Sherman, that could be a big part of it. That could be a big part of it. And we looked at that data just a moment ago, right? A lot of stocks have not performed. Okay, but the breadth is getting better. The breadth is getting better. They are watching YouTube and the world is coming to an end in 24 hours. Some dude from 2000 said on this day. So remember, guys, there's a danger in thinking in averages. You always hear, and I repeat it too, right? That historically, stocks will average between 8 to 10% per year, but you go back 75 years, There's only been 4 cases where he actually fell into that 8 to 10% range. Isn't that something? Patty, I like that. Patty says people have more information now and they understand what is happening. Well, we do live in the age of information, but is it a matter of information overload? Are people overloaded with too much information? Quantity over quality. Analysis paralysis. You hear that in trading circles as well. And I think Jeff hit a nail on the head too. A lot of people see bad economy, hate others making money when they aren't. Well, let me tell you something as a trader. And it's true. We talk about the importance of that mindset. I love seeing people make money. Even they make it more than me. I mean, usually it means that they have a skill that I don't, or they're better at something that I do as well. I try to learn from them. I always say, hey, if I'm the smartest person in the room, I'm in the wrong room. I'm in the wrong room. So we have to understand the information that actually makes a difference in your bottom line, in your portfolio. And that's why I started off this session by saying prices are crystallized beliefs. Okay, we can look at consumer sentiment surveys, we can look at all that stuff, but that's not actually going to make you money, right? Only price will make you money. And so the price doesn't lie. We can't, let me actually jump back to think or swim here and use this example of the Dow. It is an objective fact that as of 11:58 a.m. Eastern in 35 seconds, that the all-time high in the Dow is 48,520 in the Dow futures. Okay? That is objective. No one can disagree with that. Now, what does it mean? What does it mean? Does it mean good things or does it mean bad things? This is where we start making a market. This is where we start making a market. Oh, it's bullish. Oh, it's bearish. Oh, I want to buy it. Oh, I want to sell it. Oh, I want to hold it. Oh, it's neutral. Oh, the world's going to end tomorrow. Oh, in a year, we're going to be colonizing Mars. So this is why we have to study history. This is why we have to study patterns. This is why we have to study in the past, because human nature itself actually doesn't change. I know we have access to more information now, but do you think people were any less greedy during the 1920s than they are today? Do you think people were any less greedy during .com than they are today? I was actually reading yesterday, you probably heard of Benjamin Graham. He wrote, like he's kind of like the godfather of fundamental analysis. And I make fun of fundamental analysis. I call it fundamental analysis, basically, using balance sheets and earnings and cash flow to determine whether a stock is a buy, sell, hold. Made a fortune on Wall Street in the 1920s as well. He was a millionaire. He was a millionaire, and he was writing in his memoir saying like, "Oh yeah, I started fantasizing about beach houses and having a yacht and doing this and that. I thought I had it all figured out." He was 31 years old, became a millionaire back then. You need to understand how much money that would be today. How much money that would be today. That's a lot. That's a lot. And he blew up. He blew up. He lost like 70% of his money. So we read his books today. It was one of the first books that I read, on trading way back when. Actually, the first book I read was One Up on Wall Street by Peter Lynch, long time ago. But then I think it was Security Analysis. Yeah, Security Analysis by Ben Graham. So, you look at guys like Jesse Livermore back then. Benjamin Graham, he's the guy that started all the fundamental analysis stuff. So kind of like one of Warren Buffett's idols, if you will. So anyways, no, again, these are all things to think about, but let me go ahead and jump back over to the PowerPoint slide and show you how historically when stocks are up more than 34% over the past 7 months, you go out a month, 2 months, 6 months, you're up over half the time. 1 year later, you're up 83% of the time. So, you're probably going to get into some chop and some sideways action, but I want you to understand, I need you to understand that just because the market has been going up doesn't mean it actually has to go down. It can actually go sideways. Okay. It can actually go sideways. And I'll show you kind of a historical instance when it did that not too long ago. Okay. So you go back into this period here between 2014 and 2016. Okay. The Dow at the time traded in a 3,000 point range. Okay, now that's pretty big because you had these 20% corrections, right? Excuse me. But for basically 3 years, the index did nothing. For basically 3 years, stocks did nothing. And this was during quantitative easing. Actually, take that back. This was the taper tantrum. Taper tantrum. Then you kept rates at zero and then eventually continued higher. Okay. So again, keep this in mind. When you have these big runs up, a lot of times you get sideways markets afterwards. So we've been trending higher now cleanly for the last 3 years. Are we going to go sideways for a couple of years and then eventually continue higher? Or are we going to boom and then drop hard? Seems like they want to boom it. Seems like that's what they're trying to do. So interesting stuff. Let's take a look at some of the big tech names. Well, take a look at tech. Tech is down today. Again, semiconductors are up nicely, outperforming even the Dow. Russell 2000 was up pretty nicely, and it's since faded. It's down, now down on the day. NVIDIA kind of chopping around. You do have NVIDIA earnings next week. If anything is going to galvanize this market in the near term, it could easily be NVIDIA's earnings. Okay. So we will be watching for that. Apple, one of my favorite stocks in the Mag 7, closed at a record high yesterday. Closed at a record high. Did not make a new all-time intraday high, but it closed at a record high. That is bullish. Amazon still flagging as we wanted to see. That's where the strength is. Now we got Tesla. Tesla still struggling to find some momentum here. Let's see how it finishes the week. It started off the week well, since faded back a little bit more. Oops, I don't want that one. But let's see if we can get a rally into today. And we did get a rally into the close yesterday, but it seems like we're just waiting for some sort of headline. The setup still looks very good. Still looks very good. And so we'll be looking for it. I think Tesla is going to be the best stock of the Mag 7 going to Q1, Q2 of next year. Okay, so we are positioned for that already. But then you have names like Microsoft that have been struggling. Meta has been struggling. Doesn't look like the issues are done yet. So it's been just a big rotation. Then you have Google, which has been very strong, hit another new all-time high today. I'd still like to see Google take a break. Now let's take a look at China. China's up today. You take a look at CQQQ, down a little bit. So Chinese tech having some issues. I know that Baidu was down. Alibaba having some issues as well. I still like China. I think it's going to be a big theme going into next year. I think you're going to have a big mania in Chinese names. So we're keeping an eye on that as well. But again, the bigger rotation that we are seeing, and we've been talking about it regularly here, is into healthcare. I talked about it live with Garrett this morning as well. IBB hitting a new multi-year high. Okay. And you zoom out to the monthly chart, this says it all. IBB is only back to levels not seen since December of 2021. That was the last time that year it hit a new all-time high. Healthcare, the second largest index, or the second largest sector, excuse me, in the S&P 500, hasn't made a new all-time high since September of last year. Now, if November ended today, this would be the third highest monthly close in history, but November is not ending today. This is a clean breakout. So, is healthcare going to take the burden off the shoulders of tech for a bit? Because tech's been doing a lot of the heavy lifting. Healthcare is the second largest sector, and it's done nothing in over a year. All of the gains that we've been seeing have been coming mainly from tech. So now what happens if you have the second biggest sector start to come back alive? Okay, well, it's probably going to be good, and it probably means that tech is not going to be home to the best opportunities. This is normal. Why do you think back in May we came out with the great tech reset? Because coming out of market bottoms, tech typically outperforms, but it doesn't last forever. It doesn't last forever. We are looking for new leadership, and it's on our horizon for 2026. Now, what I would like to do is show you how I'm keeping track of these opportunities in tech. I'm going to give you a little sneak preview here. Is this going to give me the same problem as it did this morning? Seems like it is. I don't know why it keeps doing that to me. When I switch over. Do you see my new screen? Yeah, I think so. I think we're good. Okay, so here is the Trinity Terminal, the new Trinity Terminal. And what's really cool about it is that it shows the most important stocks in the market. It resets every day. Okay, so we have 36 stocks that are showing up today. And then it actually filters these stocks according to the sector. So we're seeing more and more strength come from healthcare. You can even go back to yesterday here and see, actually, technology squeezed out and beat healthcare yesterday. But today it's very clear that healthcare is where all the money is flowing. So you see it in the outperformance. You can click on this bar here, then it'll filter all of the healthcare stocks that are coming up in the terminal for you. You just click on the side here, then it goes away. And then we have the proprietary Trinity score, which ranks these stocks. Where do you think I got the Cogent Biosciences idea? We had to let this stock go. Do you remember? It was on our radar, and then it gapped up 140%, okay, on Monday. Couldn't do anything about it, but I was already using this. I was already using this terminal, and it showed a good setup. So I shared that idea with you. But you take a look at some of these other names. If this is going to load, let's see. It looks like it's not. There we go. So you got Forge. It starts off with a weekly chart. You can change it to smaller time frames. Some of these stocks have already had some moves, but you'll see the ones that are setting up nicely for the next leg higher. So really just a great tool to keep the top stocks in the market on your radar. Here's another one, Castle Biosciences. Wow, this looks incredible. Wow, what a nice setup here on this stock. Yeah, there's just so many opportunities that are being put right in front of our faces. Thanks to the Trinity Terminal. So yeah, Mike, these are stocks in the entire market, and it actually tells you here whether it's a small cap, micro cap, mid cap, large cap, even mega cap. So it's always going to tell you the size of the company. Tells you when if you see a yellow highlight here on the volume, then it tells you that you have some high volume playing out. So no surprise on some of these names that have gapped up that you have these big volume spikes. But even like Canadian Solar here, big volume spikes. So you can see that show up at the bottom right there. So really, really cool tool that we developed here at Trinity Trade here at TheoTrade for the Trinity Trade. And, we actually released that to members of the Trinity Trade yesterday. So brand new tools. So, okay. Let me go ahead and jump back over to, I actually have to change it didn't look right when I had the higher screen resolution. So I want to change that. Okay. So let's take a look at crypto. crypto's still having some issues here. Did we get a little bit of a bounce in Bitcoin? That's another lower high, and you hit a lower low here. Bitcoin still has some issues, but that low is still holding. Now, if we complete a higher low here compared to this low from last Friday, that wouldn't be terrible, but this is just chop. This 4-hour chart does not look good. Bulls do need to bid this back up if they're going to keep this alive in the coming weeks. But, I think this is a big reason why there's a lot of anger about this rally is because, a lot of people are overweight crypto and they don't like seeing it underperform. The weight of the evidence does show that we had a massive liquidation, a massive reset in sentiment in crypto. Let me go ahead and show you that there's actually quite a bit of negative momentum that is corresponded to bottoms before profit to loss ratio in Bitcoin here. So we're looking at some potential signs that the low may be complete, but that doesn't mean that you have to go out and buy it right now. Like there's going to be some more chop, might get some better risk reward entries. So, if you missed buying the low, we actually took a little bit of exposure in the Trinity trade recently. When the model was saying, hey, like there's a good chance of a bottom here. It might not have been the bottom. It could have been the bottom. It's looking kind of like it was a bottom of importance. And so, we'll see what that holds, but that doesn't mean that you can just go out and chase, those names. So yes, that's what's going on here in crypto, and you see what's going on in gold and silver here. This is getting more and more compelling that the bottom is complete. Actually, silver's about to close at a new high here. Pretty remarkable. Is the correction over in metals? I mean, it's looking more and more likely like it is. It's looking more and more likely like it is. I mean, it didn't really drop as much as I would have liked to have seen it drop. But if anything, that just speaks to the strength of the trend. Okay? Speaks to the strength of the trend. So, you take a look at some of these names that have been doing a little bit better. Barrick, we had some nice trades on that in the Trinity not long ago. And then even in here, we had some decent trades in names like First Majestic Silver. Earlier this year, I did a special presentation on precious metals back in January. It's crazy to think. I don't know where this year has gone. But yeah, there's more and more opportunities that are presenting themselves. They're just not quite ready to take advantage of, I don't think yet. Plus, we'll probably get a little bit more chop before we go straight higher. So, all right, guys, I have something really excited, another thing to share with you. It's the holiday season. It's the holiday season. So you know what that means here at TheoTrade. It is time for the $50,000 huge Black Friday giveaway. So this is the deal. For a limited time, we have 50 $2,000 Gianni Di Poce Theo credits available for purchase at $1,000 each. You can instantly turn $1 into $2, and you can apply your $2,000 credit to any of my masterminds or trade alert services. This is a first come, first serve, and a strict limit of 2 credits available per person. Give our support team a call for details. The number is 623-244-5657. Again, the number is 623-244-5657. Use code word Gianni. You have to use the code word Gianni. It's a great deal. And not only that, but you will be entered into a contest to win a Falcon F10 trading laptop. Again, you will be entered into a contest to win a Falcon F10 trading laptop. Claim your credit now here today for Black Friday. The number to call us here at TheoTrade is 623-244-5657. Again, 623-244-5657 and use code word Gianni. Okay, our team will take care of you. So that's what I had to share on the extra matters for today. So let me see what else we got going on here. Let me check the portfolio real quick. Yeah, we are trying to bounce. We'll see. Again, what's so odd to me is how you have names in chips that are doing well today, but the overall market is struggling. You're still at the lows of the day. Wait, did I jump back to the right? Okay, good. Wanted to make sure I was on back on think or swim here, not still on that slide. So yeah, a little bit of a bounce here in the S&P, but a little bit of divergence there. Maybe you do get a little bit of a rally here. Technically is a higher low. Excuse me. I've had a very, very dry throat the last couple of days. Um, Robbie, can I use 1,000 credit to buy some strufoli for Christmas? Maybe, Robbie, maybe, maybe. Um, so what I will do is I'm actually going to have this gonna run some screens here. Well, I have the screener up in the background. Now you know what it looks like. But let's take a look at some stocks. So I'm gonna have Thinkorswim up so it's easier to see. But let's take a look at some of the names that are showing up on the screener. So, one of the stocks that has been doing very well is IREN, and it should be on the screener. It should be on the screener. Very clean uptrend. You are down some, still holding its momentum. I'd like to see this one build out some more of a base. So I'm not ready to take a trade on that one just yet. But Bloom has been a very strong name this year. Okay. I don't see a trade immediately on this. CDTX, Sedera Therapeutics. Now, this is one, okay, I think I set an alert on this one, and there's a reason why. Because, yes, I was already working with this screener, for a couple of months now, and the stock remains a very nice setup. Definitely worth being on your horizon, on your radar. And so we'll see if we get that move. So what else do we have here? Mineralist Therapeutics. I think, did I see an alert on that yesterday? We did. Um, yes. And you had earnings too. Nice break. Weekly chart. That's a clean break. I think the move has already started. Yeah. Yeah. A couple other names we'll look at here. INDV, remember that stock that we traded? Yeah, well, that came from the terminal, guys. We booked profits at 32 bucks on that stock. I think that was last Friday. So yeah, this was another stock. So you've seen I've shared some of these stocks with you as well. And now you can have access to it too. So let's see what else. EOSC, this has been very strong. A little bit of a pullback on that. InSmed, that's been looking pretty good too. Lemonade, financials. Not a lot of financials showing up on the screen today. But, it's interesting because you look at the financial sector, it actually looks all right. Again, rotation. This looks like it's about to break out, guys. It's really hard for me to be bearish. Yes. Oh, thank you, Tony. I will read out Tony asking what the phone number to give us a call is 623-244-5657. Again, if you want to claim your Theo credit, 623-244-5657. Make sure you tell them that Gianni sent you. Again, I'll say it one more time. 623-244-5657. Take advantage of our Black Friday credits here at TheoTrade. So, yeah, financials looking pretty good. Earlier this year, had some really nice trades on Robinhood over in the Trinity trade. It's been going sideways now for a couple of months. I think it's building out its next base for the next leg higher. It is a little extended again. This just comes back down to rotation. But you take a look at some of these big banks. Okay, do you think that we would be on the verge of a great financial crisis with JP Morgan hitting all-time highs? Now, it may just be the rumor of 50-year mortgages, okay, which is not going to solve all of our problems, guys. It is what it is. A long-term mortgage is basically a leveraged bet against inflation. You got to think about it like that. Do you think property prices are going to be higher 10 years later, 30 years later, 50 years later? If you borrow money and you're right, then you made out all right. The problem is you pay so much interest, so much, your money that you could have invested otherwise. You really need the property value to go up. Um, yeah, Chicago, Dave, I did see that. The Trump's meeting with bankers to lower the percent of capital they must hold. Well, we've seen this story before, guys, haven't we? We've seen this story. You know, Patty, you raise a really good point. Right now, it is more affordable to rent. Um, and honestly, if I didn't move 5 years ago and get that sub 3% mortgage, I'd rent. I'd rent. Hey, I wouldn't have to worry about my deck getting repaired right now. I wouldn't have to worry about all this other maintenance that I got going on. I just call up the landlord and wouldn't have to worry about property taxes, homeowners insurance, you know, all that stuff. The grandkids have to co-sign the loan. Yeah, I mean that actually used to be a thing, especially in Europe, where not only did you inherit assets from your family, but you would inherit the debts too. We don't have that in America. We don't have that in America. It's another reason to be happy with the economy that we are in, right? Things like debtor's prison, but yeah, it used to be that debts were not dischargeable at death. So, if your parents had debt, you would inherit it and you were responsible for paying it as well. It's a big problem. It's a big problem. So again, no system is perfect. To think that that a perfect system exists is silly. But in many ways, things are better now than they were before, right? Things are better now than they were before. I mean, even our least privileged members of society, they in many ways live better than kings a couple hundred years ago, right? Hot showers. In Switzerland, they mortgage forever. What do you mean, Mari? Like, on the lengths of the mortgages, or are you talking about like it's not dischargeable? So yeah, I mean, if you die and you have a mortgage on your home, like the bank's going to take the property unless you pay the mortgage off, right? Like it goes into an estate. But if the estate has no assets and it can't pay those debts, then the bank writes it off, right? So yeah, putting on like my old I shouldn't even say anything, but anyways, let's take a look at some other banks here. Goldman Sachs breaking out here too. Wells Fargo. So financials look good. Financials look all right. You know. Oh, they keep refinancing in you inherit the real estate plus the debt. There's a reason why Switzerland's like the financial capital of the world, right? The Bank of International Settlements. You guys ever looked into that thing? People always talk about the Fed. You ever look into the Bank of International Settlements? That's a rabbit hole you can get into. Um, so it's basically like it's like an IMF World Bank type of entity, clearinghouse type thing, but it's in Switzerland. Um, yeah, Italy does make you take an insurance policy against the loan. Yeah, yeah. And they make you put a lot more down. So again, I've talked about this before, like 30-year fixed mortgages, 5% down. That doesn't exist elsewhere, guys. And so when these discussions come up, yeah, there is a serious issue with housing affordability. Should we allow, and I'm not saying yes or no, I'm just like this is the debate, right? Like I do listen to the sides of the debate. Like, should we allow foreign investors to come in and buy up all the housing, borrowing our money, accessing our cap? But at the end of the day, like, hey, you want to be a world reserve currency. You want the world to subsidize our way of life because that's what they do. That's what they do. In Europe, you don't get to go and get a credit card with zero APR for 18 months. That doesn't exist because they don't have credit markets, bond markets like we do. So the more you know, right? The more you know. And I think it just makes you appreciate, right? Like we're going into the season of thanks. You can't have it all. I know that like we're told like, oh, you can have it all. No, you can't. You can't. That's not how the world works. That's not how the world works. And so we try, as traders, we need to be realistic about things like that. Okay. So yeah, banks are looking all right. I think Bank of America, I think finally hit. Was anything of Bank of America? No, it still has not hit. It's about to though. And honestly, this looks like a monster base. Like we're about to see Bank of America go to $100. Could you imagine if financials and healthcare were the best performing sectors next year and tech did not much? That would probably piss off a lot of people, wouldn't it? It'd piss off a lot of people. A lot of people are not positioned to make to be ready for that, right? So, anyways, final minutes here before I turn it over to Blake for the next segment. S&P just still not really moving. It's a really odd session today, guys. Crypto trying to hold. Ethereum, yeah, still not really much happening there. But I'm not gonna lie, guys. I can't really get over the fact that the Nasdaq is so weak with chips doing all right. Because every day I come in here and I say, oh yeah, it's a risk on day. You got Nasdaq outperforming and chips outperforming, or it's a risk off day, and you got the Nasdaq underperforming and chips underperforming too. So very unusual. Very unusual, but that's sometimes the market likes to deal you hands like that. But again, just keep an eye on bonds here because we are at the session highs, and crude oil getting the smackdown. But yeah, this all plays out with the whole bearish crude oil thing, and just makes you think like what's the path forward for XLE? Usually a sector you start to see outperform when you get into the later stages of the cycle. So I don't think we're early anymore. I don't think we're late. I think we're middle. We're in the middle. And that's why you're seeing financials. That's why you're seeing healthcare do so well. But the big opportunity, the big story, the next phase of real AI boom type moves rests with the biotechnology sector where innovation still occurs. Okay. What can AI do to improve how we develop new treatments? What can AI do to dissect and decipher the data that comes from clinical trials? What can lower interest rates do for all these biotech companies that have no revenue and no earnings? Well, it can help them stay alive a little bit longer. So yeah, the Dow is up today because of financials and because of healthcare. And again, for me, it's just odd to see the NASDAQ struggling with chips doing all right. So anyways, I am out of time. I'm going to turn it over to Blake Young here, who's going to be taking you through the next segment. I am going to be live today at 2:30 p.m. Eastern with members of the Trinity Trade. I'm going to be looking at the Trinity portfolio as well as diving deeper into some of the other setups we're seeing in this market, as well as getting everyone used to how the new Trinity Terminal works. So that's all I have for today, everyone. Thank you so much for tuning in with me. And Blake, are you
Yes, sir.
ready?
I am.
Okay. I'm going to get out of your way, and it's all you.
All right. Well, thank you.
Thank
I
you.
appreciate it.
Yeah.
All right. I think I'm sharing. So have a fantastic day, Gianni.